You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 14th day of November, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see my screen, I'm going to put a chart up. If you can't see it, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that's going to give you one-click access to the show each and every day. Using that path, you have access to the chat box. You can ask questions, participate in the discussion. Now, there is another solution, another path. If you're out of the office, away from the desktop, just grab any internet-connected browser, point it to cfrn.net/live, and there you'll find a live real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, this is a 4-hour chart we're looking at. S&P 500. We popped into this range here between these two monthly zones on November the 4th at 6 a.m. Eastern. November the 4th, 6 a.m. Eastern. Today's the 14th, so at 6 a.m. Eastern this morning. 10 days. 10 days inside of between these zones. Now, we've published the weekly trading zones since December 14th of 2009. They go out to partners and passport holders every Monday morning, 6:15 a.m. Eastern, email and in the private Telegram channel. In celebration of that 10-year anniversary, I decided to continue the quest, and well, here you see it. And so far, I do like very much what I see. This will be, in my narrative, in my understanding of markets and how markets work. This is, it's not something new, but it's an added dimension that I have actually put it on the chart. We have 76 up to 90. So that's a 14-point range. And we've made the trip all the way up once and then down. That's 2, 3, 4, 5, 6, 7 times so far. And this candle, if it continues printing red, then I guess we'll add one more to that tally. We're in unusual market conditions right now. Let's look at the daily chart and put that in perspective. Daily chart. There we go. All right. Okay. This little area up here that we've been talking about, and all this is, it represents a measured move identical to the move we had from this all-time historic high to this all-time historic high. So nothing fancy, no secret, just technical analysis. And so we got here, we arrived, I guess we could, we'll call it the 5th, okay? Okay, so we got here on the 5th, so we've now spent 1, 2, 3, 4, 5, 6, 7, 8 days consolidating in this range, the one we were just looking at. What you see right here, zone to zone to zone to, you get it. That's this right here. Eventually, price is going to break away from here. If we break to the upside, we'll be looking for a pullback to the BBC and an opportunity to, well, the narrative will certainly be to the long side if we take out this swing high right here even. On the reverse side, let's take a look at this. There we go. If we don't break to the upside, if we continue sideways here, the CFMA1, which has been blue and climbing since October the 11th, if we continue to consolidate, that's going to flatten out, and then it won't take much in the way of a downward move to turn blue and climbing into red and falling. And when blue and climbing becomes red and falling, well, you can see what happens. There, and there, and there, and there. If we develop red and falling, then this trip down to the BBC, it could be very quick. The market takes gravity into account. You may have noticed that markets often fall faster than they rise. So the bottom of that little rectangle, or no, let's use this number. Let's use 3071. What's the swing low here? At 63. 63 and 71. So now let's go back. Oh, you know what? I need to put that on the December contract. It's been on the continuous. The continuous is great for charting, but to actually put on a takeoff in order, you've got to switch it to the current month or the month that you want to trade. Okay. All right. So that low right there is 3074. And if we back up all the way to this low here, we weren't quite there yet. That's 63. From where we're at the moment, 3090, the BBC's at 3051. So we've got about a 35 to 40 point potential move here. And really, I think to set it in motion, we just need to take out this swing low from yesterday. 75.75. And on the 30 minutes, that's going to be below here. But we still have an entire zone to work before the market even has to make that decision. So 77 to 85, so that's an 8-point range there. Earlier in the week, we made the trip down and the trip back up. And then once we got up here, from the zone to the zone, back down to the zone, up to the zone, well, you can see just this whole impeachment proceedings and Jerome Powell testifying kind of got the market a little tied up. And if you have managed to get your goal every day, or remain profitable, or even break even, honestly, through this bell's for you. Congratulations. Because these are difficult waters to navigate. You know, the market looks like it's gonna get a move on, and then it stops, and then it reverses, and it really looks like it's going back to the zone below. Then it reverses and doesn't quite make it to the zone above, and then pulls the same thing. And when you see that, when you recognize that, this is a market you should just leave alone. Go look at a different market, not one of the indices. You have to look at gold or crude, and let this thing sort itself out so we can get back to, you know, normal type moves. I mean, price it's still doing the deal, zone to zone to zone, but the follow through, even on smaller time frames, it's just not there. So, and there's nothing you can do about it. You can't outfox it, you can't outrun it, you can't outthink it. You just have to be patient. You just have to be patient. Okay, today's Thursday, Dr. Tom Day, so let me give you the numbers here real quick from around the world. These are the cash markets. And then Michael will give us a recap of the live training room this morning. All right, let me grab some fresh data. Here we go. Dow currently down 74 points. NASDAQ down 33. S&P 500 down 7. And the Russell 2000 at the flat line. In the commodity basket, and we did have crude inventories today, currently down 24 cents, trading 56.88 last. Gold up $9.89, trading 14.7320 last. So far, no movers, no shakers. Let's go to the Asian markets. At the close, the Nikkei was down 178 points. The Shanghai was up 4.5. The Hang Seng down 247. And in the European markets at the close, FTSE down 58, DAX down 49, and the CAC down 6. That gives us a mixed day in the Asian markets, red day in the UK. So far, it's a big red radio Thursday here in the US of A. Let's get that recap from Michael. When I come back, we will recap the Concierge Trade Alerts, Logic 247. We'll chat to John for a minute, and then Dr. Tom be here top of the hour. Okay, Michael, it's all yours.
Okay, I got it. Bringing it over. All right. Yes, you should be looking at my charts now.
Got it.
Okay. All right then. We'll get on with it. All right. Good afternoon. Good afternoon, everyone. Today is Thursday, the 14th day of November, 2019. Hang on. Let me bring that other way. Here it is. If you have not taken the free trial and you want to take the free trial, go to the home page at CFRN.net. Right here it says 5-day free trial apply.cfrn.net. Click on that and you'll be brought to this page, EminiTrainingschool.com. You can go directly to this page, EminiTrainingschool.com. But on this page, all we ask for is your name, your email, and your phone number. Click on Register Now. When you click Register Now, you will be sent a confirmation link. You must click on the confirmation link. Okay. We don't know you took the free trial until you click on that. Now, the spreadsheet. We had a rough start to the day today, and like Dwayne said, these have been difficult markets, really. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, well, as I said, it's the 14th day of November, 2019. We lost 8 ticks in the euro, made 11 ticks in crude, and 4 ticks in gold. That put us exactly at $100 per contract. Today, it took the whole morning session to get to the goal for the day. We started out with 2 stop outs, and then there was just no trading opportunities until right at the very end in crude oil, where we got it back. It took 116 minutes and 6 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took 6 trades. So on the month now, we're up $1,250. That's over 10 days, averaging $125 per day. And on the year, we're at $32,036. That's over 207 days, averaging $154 per day. That is 1 contract, 2 hours per day. Okay, now let's go take a look at what we did or didn't do here. In gold, there was no trading opportunity until right here, and I didn't get filled on that one, and that one went 4 ticks into profit before I could get filled on it. Then gold had this big run up right here. It didn't give a trade opportunity on the way up, sadly, but we did grab 4 ticks right here. Okay, and then there was nothing for the rest of the session. It was trying to do a cycle reset, it looks like, and nothing there. And there was a little bit of a long trade here, but it was going into the high of the day, so I don't know exactly how that would have panned out. But we don't have anything here. Okay. That was gold. Now the euro. We just had this one stop out here on the euro, and I'm just looking at, during the break, there was a long opportunity right here during the break. Okay, but the euro, it just did not give up much at all today for trades. In crude oil, well, we started out back here with the stop out on crude, and then it just got really choppy, wasn't giving anything up, and then it finally started to move a little bit. Had a long trade here that we didn't get filled on. Then we had a short here for 10 ticks, and another short right here for 9 ticks. And this is where we got our goal for the day, right here, 11.25. See, during the break, it looks like during the break there was a shorting opportunity right here going into the low of the day. A long opportunity right here that gave some profit, and that was it on crude oil for the day. Okay, on the ES, we had a break-even trade right here, and we missed the short right here. We didn't get filled on that. Now this is during the break, and in here is during the break. We didn't have anything that we could do in there, and we went from this zone to this zone. And one of the questions this morning was about going from zone to zone. If you look at a larger time frame, can you use that as a bias to go from one zone to the next zone? The answer is yes, you can. If you look at the ES on, say, a 5-minute starting at 10 o'clock, right here at 10 o'clock when it was at the zone. Now, the 4-tick range is going to give you more opportunities for entry, okay? But once the MA1 crosses below the BBC, when you're on your journey from this zone to this zone, that's when you start looking for the shorting opportunities and develop the bias on the 4-tick range. Okay. Put it back up like this. You see, this is where we would have started looking for shorting opportunities. Right there was one. Right there was one. And that was one of the questions this morning. All right. Well, with that, let's go back here, and I will show you this. If you have not taken a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought here to this eminitrainingschool.com, where all we ask for is your name, your email, and your phone number. Click on register now. Once you hit register now, you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial, so you got to do that. All right? And let's see, the spreadsheet. Here we go. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 14th day of November, 2019. We lost 8 ticks on the euro. We made 11 ticks on crude and 4 ticks in gold. That put us at exactly $100 per contract. Today it took the whole morning session, 116 minutes and 6 trades to get to the goal for the day. And we took a total of 6 trades. So on the month now, we're at $1,250. That's over 10 days, averaging $125 per day. On the year, we're now at $32,036. That's over 207 days, averaging $154 per day. Okay. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready. Okay, we got a chart.
Okay.
Recap the recap.
Today it took 6 trades, 116 minutes to get to $100 per contract.
That's good bingo.
Another green day.
Another green day. Okie doke. All right. Looks like I got them. Here's an interesting bit of news. Bitcoin fixes this. What does it fix? According to the headline, PayPal cut payouts to over 100,000 Pornhub models. Well, what's this all about? Bitcoin is being championed as the solution to a new payment crisis affecting the adult entertainment website that I just mentioned. I won't mention it again. In a blog post on November 14th, they revealed that payment processor PayPal had abruptly stopped servicing their models. Previously, models throughout the world received payouts via PayPal, which has not publicly stated why it cut them out of its platform. A company spokesman said, "We're all devastated by PayPal's decision to stop payouts to over 100,000 performers who rely on them for their livelihoods. They are now using, instead of PayPal, direct funds transfer alternatives." The website began a deal with cryptocurrency project Verge, XVG, last year. While users can purchase products with various cryptocurrencies via their partnership with merchant gateway PumaPay, which I've never heard of. The debacle is just the latest in a string of skittish moves from PayPal, which has become well known for its seemingly arbitrary account shutdowns. Oh boy, I think everybody that's ever dealt with them. I mean, if you're a consumer and you use it to order products, and if you use it like a normal person, you probably don't have too much of a problem once you get it up and running. But if you conduct business on a large scale with them, they do do some arbitrary stuff, just like the article says. In each case, Bitcoin proponents highlight the benefit of using censorship-resistant cryptocurrency instead. Bitcoin transactions cannot be canceled or denied by a third party since they are peer-to-peer. The adult entertainment website's problems, despite the Verge deal, nonetheless put the lack of overall knowledge of cryptocurrency in the spotlight. All the employees say, "I don't even understand what that is." They're also, Facebook is, well, Google is going to start offering checking accounts. That news came out this week, or it's the first I heard of it. And Facebook is adopting some kind of PayPal alternative. Best I understand it, I haven't really studied it yet, but I heard it in passing. And that's something I've said for years, why Zuckerberg would not directly compete with PayPal. Because with PayPal, you have to go through this process, which seems a bit archaic, where they make a deposit in your bank account for like 2 pennies or 4 pennies. They make like 3 separate deposits, and then about 3 days later, you can log in, tell them the amounts, key it in, and voila, you now have a PayPal account. It's been a long time since I opened an account with them, but from a conversation I had with someone the other day, I think they still use that method to prove that you really are who you say you are and that you actually own that account. Well, Facebook is way ahead of the game there because they know who you are. They know your Aunt Ethel. They know your birthday. They probably know what kind of car you drive. They've got so much personal information on you that the whole, 3 deposits over 3 days into a checking account or something. So I guess finally, Facebook's decided to take advantage of, the payment industry. I don't know how many billions of dollars it is, but just from people coming here to work and sending money back home, that's a multi-billion-dollar a year industry. So I guess Mr. Zuckerberg decided he's going to get his piece of the pie. There are other competitors to PayPal, but no one has matched them in just sheer size and number of clients that they have. I believe I'm confident Facebook has more members, subscribers, whatever you want to call them, than PayPal has. So, if you own PayPal stock, is PayPal publicly traded?
I think it's owned by another company, actually.
I think. Here, I don't have to think. I'll just look real quick. That was the alert ringing from earlier. I'm just opening up that platform. So I'll show you guys what that alert looks like now. It's a good time to do it. It came to the wrong place. I just got to go back to the channel and set it up again. But the alert itself said this: gold greater than 1472, trigger 1473. It's going to trigger at the alert price for now, while I work out all the bugs. For instance, if we had an alert that said consider being long 3090 on the S&P, the alert's going to actually come to you at 3090. Once we have a couple weeks worth of data to work with, we'll determine market by market how much advance notice we want. So if the alert says consider being long 3090, I can have it send out the alert that it's close to triggering at any price, 87, 88, 89. But the different markets are going to take it's going to be a different figure for each market. So I figure we'll just track it now, maybe 2 weeks or a month, and then I'll go in and adjust them all so that you get a heads up. But because important prices in important areas are almost always tested, even if you get the alert, right when it triggers the first time, on a smaller time frame, we look at it here on the 30-minute, but on the smaller time frame, if you're executing on the 4-tick range, like we use in the live training room in the morning, it's going to go back and forth across that line, typically more than a couple times before it gets underway and takes off. So let's do the Concierge Trade Alerts real quick. So it's just going to be a very simple message that will show up right in the alert channel. I could feed them into a different channel. Maybe I will, just so that it, for the reason of aesthetics. So, okay. But now we know it really is possible. I really can make it work. I just got to fine tune it. Okay, if you want to take a screenshot of last night's Concierge Trade Alerts, get ready, because here they come. Okay, so what we do every night, if you're new, if you're on the trial, if it's your first time with us, any of that, we send out the Concierge Trade Alerts sometime between 6 p.m. and 9 p.m. Eastern, Sunday through Thursday. Basically, it's an entry and a target for 8 different markets: S&P, Dow, Russell, Crude and Q, bonds, and gold, and soybeans. You've got a long, you've got a short. The idea is that when the alerts come in, to put 2 lines in the sand. For the S&P last night, 3098 and 3089. Right here. Okay, there we go. So you got 2 lines in the sand, and the alerts came out last night at 6:20. So that's going to be the 1800 hour 30-minute candle right there. It was during the life of this candle that it came out. So we had a trigger here. This is a perfect example of the market beginning a move, and then it's almost like it's absent-minded and forgot where it was going, and then just wanders around like this. So we actually touched 99.75. So that's 1 3/4 points. It didn't give 2 points. Then we come down to the short side, and we trigger for a couple ticks, and maybe a tick, a couple ticks, a couple ticks. What's the actual low? 87.50. So I guess it's a point and a half. So that's a point and a half, and that's a point and a half. That's 2 points, I guess. No, 1 3/4. And this is what it typically looks like, like it did over here yesterday. Now we're getting back above the trigger again. Important prices, important areas are almost always tested. If this was a typical market with typical moves, it would look a lot more impressive, because most of these wicks here would go down and touch the zone below, because that's just what price does. It goes from zone to zone to zone to zone. I've been doing that since December 14th of 2009. I can vouch for it because I've been watching it. And based on the historical charts, it's doing the same thing since the inception of the markets. So the best way to handle this, I mentioned this in Telegram last night or the night before. I don't know if I mentioned this on the show here, but this is the pound and British pound, and they're still going through their Brexit issue. Monthly chart, head and a shoulder and a shoulder, and this thing's been under pressure the entire month. I think I first mentioned it November I think it was the first day of the month or the second. It was a Saturday night. I do remember that. If we take out this neckline on the pound, so the neckline would go right across here, and from the top of the head to the neckline, so we'll do that again. Okay, from the top of the head to the neckline. Hey, wait a minute. What happened? Oh. Once you make it finite, you gotta click Save as Default. There you go. That'll work. Okay, is that the top? Okay. Now, in technical analysis, well, I guess you need to go to the, there we go. Now we got it. From the top of the head to the neckline. When the neckline breaks on the head and shoulders, now this doesn't always play out, and we're not pattern recognition people, but when there's something this big staring at you, it's kind of hard to miss it. And in fact, they do what is expected of them, enough to make it a thing. So you measure the distance from the top of the head to the neckline. And the measured move would take the pound down under $1. It's been a while since it was there. Now, just because this pattern's setting up doesn't mean that the neckline's going to break. And if the neckline does break, there's no guarantee that you're going to get a measured move. But again, it happens more often than it doesn't. That's why it's a thing. All right, what I want to do is I want to get rid of all the drawing objects here for now. And I want to make this a 5-minute chart. And make it an ES. Okay. There we go. All right, that'll work. So that trigger, the one we were looking at on the short side, was 30.89. 30.89. And that Gotta go back to 6:20 last night. Okay. Let's jump to day. Today's 14th, so we need the 13th. Here we go. So it was on that candle, that little doji right there, that the alerts came out. And the alert again was 30.89. So I'm going to just drop a horizontal line. So I'll go all the way across. This is not a weekly trading zone here. I'll just fix it so nobody gets confused. Okay. And then, of course, you got your other line in the sand up north there. So we look for the first trigger. We come down. Now, this isn't a weekly trading zone, it's Concierge Trade Alert. But you should think about them in sort of a similar vein. When price gets to a Concierge Trade Alert, it has to make a decision. Just like when price approaches a weekly trading zone, whether from above or below, it's decision time. One of two things are going to happen, but a decision has to be made. Now, the same thing can be said of the BBC. When price pulls back to the BBC, it holds more often than it doesn't, but when it resumes its path, it typically does so after a bit of consolidation, like there, and like there, and there. It's just what happens over and over and over. Now you've got red and falling here. You got this big, strong red candle. But when you actually, even though we didn't have follow through and we didn't make it to the zone below, which was the trade to target, you can see that it is in fact an important price, important area, because price just flows freely until it gets there. Just like when it gets to a weekly trading zone. Just like when it gets to the BBC. So did it once, did it twice. Now because we're below the BBC, we are anticipating lower prices. And when this type of thing starts to happen, you'll probably see it not only in the S&P, but the Dow, the Russell, all of the indices. And it's probably best to lay low until, let me show you when we get there. See, it's the same thing. It's not unusual to see it spike once or twice like that, to have that many in a row. It was only on this very last one that we got meaningfully below it. And when we dropped to 82, yeah, basically. So it finally gave up a 7-point move. But after all this, and each time, now if you weren't here for yesterday's show, if you watched yesterday's show, had an almost identical example, except every time it gave a tradable move, something that was worth the risk that you had to put on to take the trade. On Concierge Trade Alerts and Logic 247 alerts, we don't like to risk more than $300 per contract per trade. In the live training room, when you're learning our methodology, we risk 8 ticks on every trade, every market. Never changes. As you're learning the methodology and learning to read the indicators, learning to read the chart, gaining an understanding of how markets work, that's one thing you just don't even have to worry yourself with. Once you've got that down, Then we will teach you about market structure and allowing the chart to tell you on a trade-by-trade basis where the stop loss needs to be. And when you put it where it needs to be, if that requires more than $300 risk per contract per trade, then the suggestion is to just be patient, wait for another trigger, or look at a different market. These alerts, we talked about this, I think, yesterday. I haven't done the study, but probably 70%, certainly at least 60% of every Concierge Trade Alert and Logic 247 alert, they will trigger more than one time. Now, when we do the recap for Logic, we only recap the first trigger. In the beginning, I tried to do them all, and it was just too confusing. So, okay. Now, hopefully, one of the other markets will give us some actual opportunity. I can't promise you. And then we'll come back to this 5-minute chart and hopefully have a better example. Okay, so here's the Dow. Numbers for the Dow. Long, 785. 785. So we're going to get very similar treatment here. Okay. 785. And we had a swing high of 06. 85 to 06. That's $100 per contract. Okay. Now the trade 2 target is up here at the weekly trading zone, but with lack of follow through, you got to take what you get. Short side for the Dow, the other line in the sand, it's 27,650. Okay, that was John. All right, guys. We're going to talk to John, and then we'll talk to Dr. Tom. And after we talk to Dr. Tom, I'll finish recapping these Concierge Trade Alerts and the Logic 247.
Okay, I just opened up his mic.
All right, John, welcome to the show.
Hi
How are
there.
you?
Thanks, sir. Good, great, not too bad, thanks. Boy, you know, this market, every time they knock it down, it just comes back. It's really amazing.
Well, take a look here at this 4-hour chart. Now, we were just, did I take it? No, I didn't take it down. Here it is. Since November the 4th at 6 a.m. Eastern, to today, that's 10 days later. Look at this range we've been in right here, from monthly zone to monthly zone, back down, back up, back down. I mean, I was telling everyone, if they've survived this, they could probably survive anything.
Yeah.
This is very difficult trading here. Some would look at it and go, well, wait a minute, no, it's well defined. You know, you got the bottom of the channel and the top, and but in the real world, it's a challenge. It really is.
Yeah. No, the market's acting really well. You know, there's a little bit of a rollover on the action today, and you know, when you do get these kind of heart attack like sell-offs, and then they come back, there's always the one that doesn't come back. You have to remember that. But the way it's looking, I mean, we could be on the verge of a melt-up. It's possible.
10 days and counting.
Yeah, people put on hedges in fear of these hearings. If yesterday was supposed to be the best day, the rest of it could be a disaster for the Dems. So unless something drastic comes out, and there's a possibility any day now that the Horowitz report could come out, or there might be some indictments coming down or something that could just absolutely crush this other completely blanket the impeachment thing. There's a fellow called Blaine who's on Zero Hedge from time to time. I think he's out of England, and he's downgraded the likelihood that Trump will be impeached because these people, the 30 or 40 Democrats in Trump jurisdictions are they going to trash their career, just to go along with what is likely to be, construed as a sham deal.
Both sides swear they won.
Yeah, well, look, it's not perfect, obviously, but it's pretty boring, frankly, the whole thing. It's not riveting like some of these other things. And
Well,
most
Bill
people,
Clinton's thing was kind of salacious, but this
yeah,
is, it's boring, like you said.
yeah, it's just, and, everybody knows the deal now. There's not much they don't know already. And now all this stuff is coming out over this whistleblower. I think he's going to be, all the stuff that he's been up to is probably, he might end up being putting himself in jail. So he could be implicated because he's kind of like the go-for. He's everywhere, this fella. He's probably, how do you know he wasn't involved in some of this stuff overseas, setting up these things that trapped Papadopoulos and all these other people.
Yeah.
It stinks to high heaven. And generally there's all this corruption that's been going on behind the scenes could be exposed in a way that could be just like mind-boggling.
John, you sound like one of those right-wing extremists.
Say again?
You sound like one of those right-wing extremists.
No, I'm not really. No, I wouldn't describe myself as that. Maybe I've been reading too many tweets. But
well, look, if you like Trump, you're automatically an extremist.
Yeah, right.
And a racist and a misogynist. So it's just you just have to accept that.
Yeah, thanks. Okay. Yeah. By the way, before I forget, at one point this morning, I think the cocoa was up like another bunch of. Maybe I'm reading something wrong, but I thought it hit 2,700 this morning. Just a sec. Yeah, I'm showing 2,760, unless it's a misprint. That's because it's December. Maybe the December expired or something. That's what it is. Yeah, I'm looking at the March versus the December is up 90. So there's a real short squeeze going on in the closest month,
Yeah, let's see. After December is March of 2020.
Yeah, the March is still reasonable, but the December is up 2760, which
I thought you said the December expired.
No, it looks like it's still going.
Oh, okay. Well, then let me go to that one instead. Hey, Dr. Tom, how you doing?
I'm fine, brother. How you doing?
Any better, I'd be twins. Okay. All right. So let me drag it up there so you guys can see it too. Here we go. All right. There's Cocoa. December. It's that end-of-day data. I gotta find a different. Gotta be one.
No, that's December 2020. You got there.
Yeah, is that what I did?
Yeah.
Okay. Let's go with this continuous. See what it gives us. Yeah, it's still in today. So anyway, what's the price up to?
2760.
2760.
Which is just enormous.
Yeah, that's a big move.
Yeah, it's
too thin.
It's almost back to the 2018 highs, and it looks like it's going to go through them. So it's incredible. This is really a very, very dramatic move. The gold. Oh, listen. One of the things that the gold again. Remember, I said every single bottom, and the bottoms are very hard to pick. This thing has a habit of jumping up about $40 off that low, and looks like we're on our way to that again. And I'd say, the bottom definitely looks like it's in here on this, given the way beautiful doji there and continuing higher, expanding the range. It just looks great. If we can get up back up to 1,500, I think that's very significant. The dollar took a bit of a dump today, and it's not over yet. But I think if the dollar breaks 98, if it breaks 98, it could be headed lower, big time. So,
and that would be good for gold, right?
Oh, for sure. I think this time the dollar's toast. I think if it breaks down from here, it's over for the dollar. Especially if we break 97, 96,
I think 96 is pretty key number.
Yeah. And also the stuff that Lagarde is doing in Europe too could be supported, could be powering the euro higher, because if she's aiming to get growth going in Europe, that could be very positive for the euro. So
there's an article this morning about the deficit this year being over $1 trillion. That's got to be weighing on the dollar.
I think it will more and more, and the deficit probably going to rise even more. I think it's just the way the way things are. Take a look at Tilray, TLRY.
Oh yeah, I heard someone mentioning that on a call this morning. TLRY. TLRY. Yeah.
Remember I said to stay away from that thing when I was about 40?
This is the one that ran up to 300 in a day, right?
Yeah,
and it ran back down the next day. Yeah, right here we go.
Wow.
That's an incredible story. And look, we're right back. I mean, this thing is going to be making new 52-week lows here,
This is a pot stock, Dr. Tom.
Aha.
Yeah.
So they got high and then they came down real quick.
Yeah. So of course this is the leader, and it's dragging everything else down with it, and it's probably going to go even lower now. And by the way, we were looking at the J dust a few days ago. Take a look at that now, Dwayne. The dust and the J dust. I think we're breaking down substantially on those. Not quite yet, but we're it really looks like. Remember when we went from the previous level back in May, it just suddenly dropped off the face of the earth and started a big rundown. And this one hasn't even been able to rally really. Look at it; it's hardly rallied at all.
Yeah, it looks like the S&P
so
this week.
that's a sure sign that's a very positive thing for the gold. Also, the palladium is heading back up again, and the platinum for that matter. Maybe the lows might be in on the platinum right here. Yeah, just a little bit of a pullback, and if this thing gets back to 1800, it looks like it'll probably head up towards 20. I think the platinum looks very interesting here, Dwayne. If you can pull that up.
Mm-hmm.
Yeah, I mean it's kind of got a three-wave pullback there, almost perfect, and. Again, it's a hard thing to buy because it's a hard thing to buy down here, but looks like there could be some serious upside move in this pretty soon if the gold kind of leads the way, the gold and silver leads the way.
Here's bonds. I put this out yesterday. 157.21 up to 158.21. We discussed it yesterday on the show because that's $1,000 per contract move. So This is a 30-minute chart. What do you think's moving bonds?
Can you put it up on the daily? See how it looks?
Yeah, sure can.
Look at that doji again, another doji. See what I'm a little bit concerned about here is you've got a three-wave kind of a pullback here from the highs. Could be another wave to the upside. Maybe we're in for a bit of a weak spot in the economy going into the end of the year. Not just because, remember, we had a bit of a weak spot in March, April, May in the market. And so we might be seeing a little bit of weakness come in here, and might be enough to drive the bonds possibly up to a higher high, because this lower interest rate thing around the world could be coming here, whether you like it or not,
Yeah.
And so
it looks like we got another leg to the downside, most likely. I would say that's
if it breaks, if this thing doesn't follow through, obviously it's a whole different ballgame, because we start breaking 155, 156, 155, you really, you're going to see a much stronger economy, and you're probably going to see rates going down towards 150, maybe even 140. and rates are going to become much more normalized. But remember, the Fed, if they're in an easing mode and they say they're not going to cut anymore, but if the Fed are lowering rates, it's not inconceivable that bond prices could go higher because of them, because of the ramifications of those decisions. So, but it's great for the market, because when the bonds are going up and the markets are going up, it doesn't get any more bullish than that. What you have to be careful is the bonds going up and the market going down. We're not there yet, but again, the weirdest thing is that the emerging markets are making new lows today. So we've got an incredible divergence going on between the U.S. stock market and everything else.
What's that symbol for the emerging markets?
EDC.
There we go.
And there's always this fear about China.
Support right there.
Yeah, I mean, if they turn up from here, it's probably going to extend the U.S. rally, the U.S. market rally. And looking at the S&P like we were at the beginning, I mean, boy, that kind of sideways action, 9 times out of 10.
This one?
Yeah, is going to break out to the upside.
That's a 4-hour chart going back 10 days. 10 days we've been in this little range right here.
Yeah. And it could be a real melt up, because we're taking out that upper trend line, and that is that's the definition of going parabolic. And when you see the way, I mean, look, it's earlier on today, Amazon was down and Google was down. The main players were down, and now they're all up again. So it's
I'm just waiting for the S&P to break above about 3105, because then we've got a trade 2 target up at 3140. So that's a 35-point potential move.
Right. Listen, thanks very much for the invite. Leave it with you and Dr. Tom.
Okay.
Okay. All the best.
Right,
Bye-bye. Bye.
Have a great day.
Tom, how's your week?
Hey.
How you doing?
I am just doing fine as frogs here.
Fantastic. Let me pass you over the charts.
Okay. You're talking about all this serious stuff, money and all that. How about a little humor?
Sure. I didn't know you did stand up.
No, I'm sitting down, but this is a true story. So I don't
Sitting
know if
is the
really...
new smoking. Don't you know that?
I've heard that, yes.
You have a standing desk. You told me.
Yeah, sometimes but when I'm doing these, I'm sitting. When I'm on camera, I have to stand, because I got this 55-inch monitor and the camera has to be above it. So I have to stand for that. So anyway, this is a true story. You were talking about that pot stock, and it reminded me of something that happened in my younger days. I was living in this house that had been divided. They just built a wall down the middle of it and made it into a duplex, but pretty illegally, because the one apartment didn't have a back door. As a matter of fact, neither one of them did, because the front door of one was the back door of the other originally. Anyway, there was this pot dealer who lived next door to me, and one day I decided to have a little fun with him. I seen him carrying his garbage bag in to his house. I knew it was full of pot, and then he was in there breaking it down and putting in little baggies. So I was the training officer of the fire department at the time, and I drove my Jeep right under his window, right into the bushes, turned on all the red lights, hit the siren, and next thing I hear is this crashing sound. He's wearing nothing but jeans, and he had actually grabbed his bag of pot and jumped through the back window. I didn't mean to hurt the guy. I just meant to scare him a little bit, And so I went and looked for him. He was long gone. So the next day, about daylight, he comes knocking on my door, and he's just covered with mosquito bites, and holding his bag of pot, And he says, "Tom, man, did you see what happened yesterday?" And I said, "No, what happened?" He says, man, I had to spend the whole night out in the woods. He says, there was about 6 cop cars, came to my place and with lights and sirens, and there's about, all these cops all the place, and I barely escaped and everything. And I had to keep a straight face, because I knew it was just me and my little red light, right? But he smoked about half of what he distributed, so he was very paranoid, and he really thought that there had been a big raid on his little pot operation.
That's
anyway,
That's
yep.
funny.
Well, we've been talking about the history of gold
Right.
last week anyway, and I'd like to continue with that. But before I forget, let me encourage everybody to go to CFRNgold.com, CFRNgold.com, because we've updated the Gold Education Starter Package. So even if you got it before, you should go there and request it again. But also, we do webinars where we go into much more in depth into some of these subjects every Monday night, and they're free. They're at 8 o'clock. And so we'd like to invite everybody to come and listen. And if you ask for the Gold Education Starter Package, we will give an invitation to the webinars. If you prefer not to get them, just reply and say, don't send me the notices. But I would advise you to at least listen to 2 or 3 of them and see how valuable they are, because frankly, if you listen to these, you will learn more about gold than most of the yahoos that call themselves financial experts in this country, because they're just not trained in gold. All they know about is stocks and bonds. And so I think you'll find it valuable. And
80% of the money managers on Wall Street today have never traded a bear market.
Isn't that interesting? I mean, and scary.
Yeah, very,
because
very scary.
It was the same in the 90s when I was a broker. People kept saying, it's going to turn around. It has to. You can't just keep on going up for 10 years straight. And the young guys that had no experience with the bear market, they just couldn't believe it. So they kept having their customers going long, long, long. And of course, in March of 2000, a lot of those brokers ended up getting fired because they had no customers. All the customers left them. So, yeah, experience does count. Anyway, you'll get a lot of wisdom from these webinars, and if you get an email and it's not interesting to that subject is not interesting to you, just delete the email. And if you get it and you want to attend, but maybe you've got a
Obligation.
Yeah, some kind of obligation that night, we will have it posted the next day at noon Eastern on our website. So you have 2 ways live where you can ask questions of the instructor, which is obviously preferable, or you can do it by watching the videos, which is also good. You can still ask questions, just that nobody will answer them. Yeah.
Well, folks could call or email in a question.
That's true, because in the email I gave you my direct line, and I do take calls all day long, and also you can, as Dwayne says, write an email. Okay, last week we ended up here with a pretty obvious choice. If your grandfather had obeyed the government back in 1933 and turned in that coin you see on the right, the denomination of that coin is $20. That's what gold was selling for per ounce, $20. And the government said you have to turn your gold in, and we'll give you a nice brand new crisp Federal Reserve note that's worth $20 also. The only problem was it was denominated at $20, but it wasn't worth anything because it was only backed by debt. So today, the coin sells for around $1,500. Actually, I think gold is around $1,470 now. So these coins typically sell for around $100 over spot. So call it $1,570. But the dollar's lost 96% of its purchasing power. So that $20 Federal Reserve note is worth 80 cents today. So, Ronald Reagan, I love some of his sayings, but my absolute favorite was the 9 scariest words in the English language are, do you know what they are, Dwayne?
The 9 scariest words?
Yes.
No, I don't know that I do.
I'm for the government, and I'm here to help.
Okay, yeah. I've heard that wrapped a little differently, but it's true. Yeah, I agree.
Yeah. So FDR said he was going to get the nation out of the Great Depression by stealing 40% of the wealth of the nation, which was in gold. People had about 40% of their money in the bank, which was all backed by gold, and about 60% of the money in their house. That was pretty typical. So he stole 549 metric tons of gold. And he said, I'm doing it to end the Great Depression. The problem with that was the summer before he was elected, the Depression had already turned around and things were on the mend. So there was no rationale. I mean, how would taking people's legal money help in the Great Depression? There's no rationality to it. But people back then were simpler, I think, and they tended to trust the government, which not a wise thing to do. And this is the result. So which would you rather have, right? So let's go on with our we're all the way up to 1944 now. We started back 6,000 years ago. In 1944, the first true international monetary standard was established. Now, the background of this is that during the war, we stayed out for the first several years. The war started, can't remember exactly what year, but anyway, we didn't get in right away. And so most of the Allies were buying their war material, bullets and rockets and tanks and airplanes and everything from us. Well, just like in our revolution, the European countries wouldn't accept our paper money to buy war material from them because they didn't know if we were going to exist in another couple of years. It was a pretty safe bet that the British were going to win, right? So they only accepted gold. And by the same token, we wouldn't take the paper money from our allies, including England. We wanted gold. So we ended up with a huge stash of gold, probably more gold in the United States than all the other countries in the world combined. Nobody knows for sure because no country truly and honestly reports their gold holdings. But that's the assumption. So at Bretton Woods, New Hampshire, there was a monetary conference, and we established a gold exchange standard plus 2 international organizations, the IMF and the World Bank, both of which we were the big dogs in because we financed most of them. And since we were on a pseudo gold standard by then, remember in 1933, we went off the gold standard. Americans could no longer exchange their money for their paper money for gold. We still allowed other countries to do it. Okay, so because of that, other countries pegged their money to the U.S. dollar. So if you were trading currencies back then, it was real easy. You could just determine which direction the U.S. dollar is going, and all the other currencies are going to go that same way. Totally different world than today, obviously.
Right, exactly.
But by these actions, the U.S. dollar became the world reserve currency. Now, before that, the British had been, the pound, the British pound had been the world reserve currency. So big change in the world. We became the big dog on the financial stage. A few years later, in 1965, the U.S. started counterfeiting its coins. Now, back in 1913, we started counterfeiting our own paper money. I mentioned that last week. It's amazing that a nation would counterfeit its own money. But that's the nature of politics and politicians and bankers, who tend to be pretty corrupt people as well. So we kept our silver money silver until 1965, at which point all of our silver coins, except the $half, dropped from 90% to 0% silver. But they still designed them to look like they were silver coins. And for some reason, no one can explain why, for another 5 years, they made the $half with silver in it, but only 40%. So all our coins have been 90% silver before that. And then after 1965, all but the $half were no silver. And until 1970, it was 40%. So, we talked about Rome last year. They're the ones that invented hyperinflation by taking their money from 94% silver to 1% silver. But even Rome had the grace to leave a little silver in their money. We didn't leave any at all. It's all copper with a plating on it made to look like silver. And some people, believe it or not, today still think their dimes and quarters are made out of silver. Amazing to me. Okay. Gold became democratic. Before South Africa started producing 1 ounce bullion coins, the only way you could buy gold was in bars, and it would be the equivalent of like $45,000 to $50,000 today. So, I know, Dwayne, all the money you make trading, you could probably buy 40 or 50 of those easily. But a lot of people could not afford to buy gold at all. South Africa came up with this great idea, a 1 ounce bullion coin. So investors around the world that were looking for financial freedom started buying Krugerrands. It's kind of an ugly coin, but it was the only game in town. So that became the most popular bullion coin and stayed that way for decades. But after 41 years, another change took place. In 1974, Americans, for the first time since FDR's gold confiscation, were allowed to own gold. Before that, if you didn't turn your gold into the government, if you privately held gold other than jewelry or rare coins, you could go to prison for 10 years or be forced to pay a $10,000 fine. So we call that the crime of the century. So there was much rejoicing. Okay, Canada decides to get it on the gold deal because they saw South Africa making a lot of money. So in 1979, they produced the maple leaf, a little better looking coin, I think. And by the way, you notice they have Queen Elizabeth on there. Did you know that she is the Queen of Canada? Most people don't know that. Most people don't know that Canada has a queen. But although Canada is not a monarchy, it's still part of the British Commonwealth. So officially, Bermuda, Canada, and a lot of other places that are part of the British Commonwealth recognize Queen Elizabeth as their queen, although she may have never set foot in their country. Okay, so then the communists get in on the act. They produced the gold panda, which is kind of an interesting looking coin. And you see it says 1 ounce AU. AU is the scientific number or scientific notation for gold, and it's a 0.999 fine coin. And finally, the U.S., late to the game, in 1986, we started producing bullion coins. The first time we minted coins in 53 years. And the U.S. Treasury started purchasing newly mined gold again, which of course made the price of gold go up. Okay, 1986, a big thing happened. A company called the Professional Coin Grading Service changed forever the way the U.S. coins are graded, marketed, and sold by offering a third-party grading service. Over time, their service evolves from a very simple 4-point grading system to a very sophisticated 70-point grading scale. Now, before this, let's say you and I were at a coin show, Dwayne, and you have a coin like the one here, a US $20 coin, and you offer it to me at the coin show, and you say that it's an uncirculated coin. Well, it's not in a case like this. It's either in a cardboard flip or a plastic, little plastic envelope. And I look at it and I say, you know, that I see a little wear on it. It doesn't look like it's uncirculated. So you say, well, let's go to the grader. And at every show, there were several people there that were really experienced and known to be good graders. So we go to the grader. Let's say his name is Joe. And Joe looks at the coin and he says, yep, Dwayne's right. It's uncirculated. So I trust Joe. You know, we paid him $20, you know, to grade the coin. And so I buy it from you based on it being uncirculated. And I pay more for it because it's not really uncirculated. Later on, I find out that it's not uncirculated. And I find out that Joe is your brother-in-law. Okay. Well, that was kind of the way things were done. It was very seat of the pants. And so 33 dealers got together and said, you know, if we're going to have transparency and trust in our industry, we're going to have an independent third-party grading service. So these 33 dealers, top dealers in the country, got together and formed a what's called a grading set. They had to all agree on it and had coins ranging all the way from 1 to 70. So professional graders could go and compare their coins to the coins in this grading set. And thus the Professional Coin Grading Service was founded. Well, my buyer in Europe, the guy who purchases all our European rare coins for us, was one of those 33 dealers. So he worked for PCGS for a year or so grading coins, but then he was poached by a new company that was founded called PCGS, the Numismatic Guarantee Corporation. And he worked for them as a grader and also bought in and became one of the 6 owners of the company. So they offered an alternative, and both companies guaranteed both the condition and the authenticity of the coins they certified. So it made it possible for investors to buy coins sight unseen with complete confidence. I mean, I have in the last year bought coins for $2,000 up to $200,000 sight unseen because they were graded by one of these 2 major grading services. I don't trust the little mom and pop shops that are out there, and I don't buy coins based on their grade. But if I see a picture of a coin and I can tell it's been graded by one of the 2 big dogs, I trust that. And that trust has made the U.S. coin industry just go up hundreds and in some cases thousands of %. But Europe just kind of plugged away still with the old hand grading system. Also in 1987, the first, they called it electronic trading service was founded, the American Numismatic Exchange. But we wouldn't call it electronic today. It was teletype. You know, all these big rackety loud machines. Greg told me he had to keep his teletype machine in the basement or otherwise people couldn't talk in his shop upstairs. But later we went to computers and we have a true electronic trading system, kind of like a NASDAQ for coins, but it's only for US coins. So that's why we can still buy European coins for literally 10 cents on the dollar. So at this point, by 1987, the U.S. investor gold market had increased 7 times more than bullion in a period of 40 years, mostly due to these 3 companies I just told you about. So when people say, isn't bullion just as good as investment grade gold? Well, there's your answer, 7 times more. Okay, 1989, 20,000% inflation. Fortunately not here, but in Argentina. After a decade of the worst inflation in Latin America, Argentina had a hyperinflation that reached as high as 20,000% in 1 month. Literally, workers had to be paid twice a day, not twice a month like most people do. So the U.S. bailed out Argentina, and in doing so, they bailed out the Bank of America on the condition that Argentina institute austerity measures and back its currency with gold. By the way, that was the first time we bailed out the Bank of America. People yelled and screamed when we bailed them out after 2008, and then we bailed them out another time. They forget completely about 1989. We've actually bailed out Bank of America 3 times, U.S. taxpayers have.
Wow.
That's just, the financial press used to call it bankrupt of America. But
I'm trying to put on weight, so I'll be too big to fail.
Yeah. Okay. In 1997, it became legal to hold gold in IRA accounts. That is huge because a lot of people wanted to protect themselves and didn't want to just have paper assets in their accounts like bonds or whatever. And they wanted gold, but they couldn't do it. So they passed the Taxpayers Relief Act, okay? And people were relieved. The largest banknote in the history of the world, this is, if I hadn't watched it happen, I wouldn't believe it. But in the year 2000, the Zimbabwe dollar was worth $1.25 compared to $1 US dollar. So that's pretty close to parity, right? Before it was abandoned, roughly 4 years later, inflation hit 231 million%. And they were issuing $100 trillion notes. Now, they issued a lot of notes on the way. Their biggest note was $100 when all this started. But down at the bottom there, you see a $100 billion note with 3 eggs, just to give you an idea. If you wanted to buy a 3-egg omelet, it was $100 billion. If you wanted a ranch omelet, wanted some onions and green peppers along with that, that was an extra $10 billion. If you wanted hash browns, another $20 billion. Okay, for breakfast. But then they just kept printing bigger and bigger and bigger ones until after they hit the 100 trillion, which by that time was worth about 3 cents US. They finally just abandoned their currency. And okay, the financial panic of 2008, a mortgage crisis with roots in the Carter administration manifests itself in a major recession. Multiple financial bubbles burst over a short period of time. And you remember them, the credit bubble burst, the stock market bubble, mortgage bubble, real estate bubble, and so on. The only thing that didn't really burst was the dollar bubble. So the Fed injects trillions of dollars into the money supply. Guess whose money that was? Our money. Okay. What they should have done was let companies fail that would fail. That's the way free enterprise works. So as a result of them not doing that, we have a lot more problems today, including an unsustainable debt. In 2016, the White House Budget Office announced that the U.S. debt was unsustainable. We couldn't keep up with it. And just this morning on the news, I saw that, what's his name, Jerome, the new head of the Fed, he announced again that the U.S. debt is unsustainable. Where, as I mentioned earlier today, we're going to probably hit over $1 trillion deficit. Most people don't understand what the deficit means. They sometimes equate it with the debt. But actually what happens is every year, whatever our deficit is, gets added to the national debt. So we'll be way north of $23 trillion. But just during the 8 years up to 2016, under the reign of Obama, the national debt doubled from 10 trillion to 20 trillion, leaving the average American family owing $250,000 towards the national debt. Now, I'm planning on paying off my share this year. Are you going to do the same, Dwayne?
Sure.
Okay, we'll make it a little challenge. Okay. By the way, that $10 trillion that Obama inherited in debt, that was the sum total of way over 200 years worth of our country's operation and 40 presidents. Altogether, they only accumulated 10 trillion of debt. In 8 years, he added another $10 trillion. Okay. Just so you know what kind of guy he was. Okay. Gold hits $5,000 an ounce. Well, when did that happen? Oh, it happened in 20 ? No one knows when it's going to occur, but I've done a whole webinar on this, on what the analysts are predicting. But the most accurate analysts of gold's movement, people who've been right time and again in the past, all agree that this event will take place. And some of them are predicting $10,000 gold and even higher. So it's going to happen. When it happens, I don't know, but I'm ready because I've got a lot of gold. Okay, U.S. hyperinflation. Again, 2020, we don't know, No one knows for sure if hyperinflation will strike the U.S. Actually, I do. I've studied the economy enough, and I've studied world hyperinflations enough to know that no nation that has fiat currency has ever escaped hyperinflation. The average lifespan of a paper money has been 37 years. Now, why has ours lasted from 1944 until now? Why have we beat the odds? Well, it's because we're the world reserve currency. But one day we will lose that status to China, and that day is probably coming sooner than later. And at that point, we won't have protection against hyperinflation. Every modern nation, or every nation in the world has experienced hyperinflation at some time, but about 20% of modern nations have experienced. So no one knows the day or the hour, like the second coming of Christ, right. But we know that it's going to happen. And you can be sure of this too. There will be no warning announcement in the Wall Street Journal. They're not going to print a full page ad saying, next week, folks, hyperinflation starts. So the wise people are preparing today. They're not waiting.
You're like the frog in the pot where the heat's slowly being turned up.
Yep.
You understand that?
I understand, because he doesn't realize how bad it's getting until it's too late.
Yep. True story.
Okay, the first world hyperinflation. Well, why do I think we're going to have world hyperinflation? Well, we had a U.S. Great Depression, right? 6 months later, it was a world Great Depression. If we go into hyperinflation, it's going to trigger double-digit inflation all over the world. And it could work the other way. I mean, the way that things are going in the European Union, they could go into hyperinflation first, and then it affect us. But the bottom line is no nation is an island, except Ireland. And what happens in one country affects other countries these days. Hyperinflation is defined simply as double-digit inflation. We had that already back about 12 years after the country was founded. And we had 100-to-1 inflation. But in the 1970s, people didn't recognize it, but we had double-digit inflation then. I mean, you could get 18 to 20% CDs. That's hyperinflation. But runaway hyperinflation is much worse. And France, Argentina, Zimbabwe, and Germany, the countries that I mentioned on this program, are ones that are well known. But there are many, many other countries that have experienced runaway hyperinflation. Bolivia is about to go into that, I believe, because their socialist president and vice president both ran away and are hiding in Mexico now. And some senator has declared herself president, and the economy is just in shambles. It's a socialist economy. So you could look for that to be the next one. Okay, so all of this sounds like bad news, right?
It does.
But
it does.
It's been all first, right? So here's the first really good news today. If Christians follow the counsel of the Word of God, we can benefit from what was designed for evil. You know, the Bible says that, you know, what the devil designed for evil, God turned into good.
Sure.
If we follow what the Word says to do, we can be the head and not the tail. We can be above and not below, like it says in Deuteronomy. And that's God's plan for us. The gold standard is not something that man invented. God invented it. It's a God standard. That's why gold and silver are the only money in the Bible. So you may have seen these before, but let me just run through them quickly because it really brings the point home. The price of gold changes, but the value of gold doesn't. This is a 100-year period of time from 1910 to 2010, where a 3-bedroom, 2-bath house cost $4,000, and a century later cost almost $250,000. But based on the price of gold at those two times, it was 200 ounces of gold in each case. So why is that? Why would the house go to $240,000? Is it really worth 60 times as much? Obviously not. It's a house, right? It's a place to put your family and your stuff. It hasn't really increased in value, but it definitely increased in price. Why? Because the dollar lost so much of its value. And it's the same thing with gold. Was the gold really worth 60 times as much 100 years later? No. The value of gold is what it will buy. It bought a 3.2 in 1910. It buys a 3.2 in 2010. So the price of gold has changed, but the value of gold is not. And there's a lot of examples. Here's a Mustang that over a 35-year period of time increased tremendously in price, but it was still 50 ounces of gold. 2,000 years ago in the time of Christ, a skilled laborer was paid an ounce of gold a week. When our country was founded, it was the same. Today, it's the same. So what this means is that bullion protects wealth. It keeps it from losing value as the dollar loses value. But investment-grade gold both protects and creates wealth. And that's the key principle to take away from all of this. Bullion is good, but investment-grade gold is way better because it actually increases your purchasing power. That's the definition of an investment, right?
Right.
If something just protects the value of your money, that's not an investment, that's an insurance policy. But if it goes up in real value, that's an investment. So over a 40-year period of time, a $10,000 investment in the Dow went up to $105,000, which sounds pretty good, 10 times your money. But really, when you consider inflation, you lost 2/3 of your money. If you put the same $10,000 in gold bullion, it rose to 3 times as much as the Dow. But you still didn't make money because inflation was 300 times. So you made a little bit. It was 320. Inflation was 300, but still, it's pretty much break even. Now, if you put it in investment grade gold, it grew to $680,000. And that's using something called the PCGS 3000. You can look it up. It's an index of rare U.S. coins. But if you look at an index of their mega rare coins, the super rare coins. I don't have room on this chart to show it. It goes up to about $2 million. So over 3 times as much as regular investment grade gold and 7 times as much as bullion. I mentioned that earlier, but here's the chart that shows it. So this is what the left arrow is what has happened since the modernization of the coin market in 1986. The U.S. market has just gone up like crazy. That's the yellow one. But the yellow on the right is where the the European market is. So the opportunity is there in the gray. We have a huge opportunity to buy coins at roughly 10 cents on the dollar. So the best way to buy gold is not to buy gold jewelry for sure, not to buy gold bullion, but to buy investment grade gold. That's what it's all about. Now, this is something I like to do when I meet clients at a restaurant or something. I have 4 coins that I carry around with me, and they're the flagship coins of the world. They're all different sized coins out there, but most countries, the largest coin is a 1 ounce coin. Mm-hmm. The top left one there is the British 5 pound coin. It's actually 1 ounce and a third. They like to do things bigger there, you know. But on the right is the French 100 francs. That's a 1 ounce coin. Bottom left is the Spanish 8 escudos. That's 1 ounce. And the bottom right is the US $20. 40 years ago, all 4 of these coins, I like to use them because they're a direct comparison. They're the largest coin any of these countries made. They were the only 4 countries in the world that ever made flagship coins. And they were all worth about the same if they were as the same amount of rarity and in the same condition. So 40 years ago was our baseline. Today, the US $20 coin cost about 10 times as much as its European cousin, still in the same grade and in the same rarity. So does it make sense to buy US coins? Not to us. We haven't bought them in 6 years. We only buy the European coins. So if you're taking notes, folks, write these 4 points down. Cash is trash. If you have cash hid under your bed or in a safe deposit box or whatever, it's losing value every day. Even if you have it in the bank and it's making 2% in a CD, it's losing value because of inflation. Bullion's better because, as we said, it protects you against inflation. So think about it like an insurance policy. Wayne, do you have fire insurance on your house?
I do. Yes, sir.
Did your house burn down last year?
It did not, thank God.
Well, I assume that in January you called the insurance company up and you asked them to make sure to mail your profits on the premiums that you paid to your address, right?
I'm not that smart.
Well, if you had, they would have laughed at you because it wasn't an investment. It was a premium. It was insurance. And that's what bullion is. Think of it that way, folks. Bullion is a good way to protect money, but you'll never make money. It's not an investment. By contrast, investment grade gold actually grows in purchasing power. You can buy more stuff with it. For the last 3,000 years, you've been able to buy the same amount of stuff, food, clothing, labor, material, shelter, for 1 ounce of gold. That's good, right?
That's good.
I mean, it's stable. That's the strength of bullion, but it's also the weakness because our investments, we want them to go up. If you traded futures all day, every day, and started the day with $10,000 and ended the day with $10,000, you wouldn't be very happy.
Actually, most people would be very happy.
if they just stayed even?
Yeah.
Okay.
Yeah, that would tickle about 90% of the trading population. So.
Well, that's a good point. Same thing with stocks. When I was a stockbroker, we saw some amazing numbers. People that traded stocks on their own, I think it was 2% made a profit, 3% broke even, and 95% lost money. Okay.
It's a tragic
Now
tale.
that was,
It really is.
yeah, that was back in the 80s. It may be better now. I don't know.
And the most tragic part of that tale is that it doesn't have to be that way.
Right. If people would get education, it wouldn't be that way.
That's right.
So number 3, if you're taking notes, is investment grade gold grows. It actually grows in real purchasing power, so it becomes more valuable. It's not just an insurance policy. And then the 4th point is European investment grade gold rules. I like that word, because the monarchies of Europe, it's sort of a little play on kings and queens ruling, but European investment grade gold is much better today than investment grade gold from the U.S. If you'd bought U.S. investment grade gold 40 years ago, you would be a multimillionaire. But you can't go back. If we have one of those DeLoreans and we could go back in time and buy a bunch of gold and dig a hole and hide it and remember where it was and come back in today's time, you do great. But you can't go back in history. But in a way you can by buying European. That's the only way you can go back in history. So to summarize, politicians hate gold and silver because they hate accountability. That's why FDR took us off the gold standard, because it allowed him to print as much paper money as he wanted to with no accountability whatsoever. And I can prove that because he's the only president in U.S. history that was elected 4 times, because he was allowed to print all this money and buy votes. Next point, paper money allows bankers and politicians to manipulate the economy for their own profit. That's not the country we want to live in, folks. And the way you can protect yourself against that is to own precious metals, particularly investment grade gold. And finally, the founding fathers knew about central banks. So why do you think there wasn't any central bank called for in the Constitution? It's because they suffered under the central banks in Europe. They knew how evil they were, so there was no provision in the Constitution for a U.S. central bank. And it was only by going against the Constitution and passing a constitutional amendment that they were able to reverse that, because the Constitution said that gold and silver are the only real money. Gold and silver are the only constitutional money. And of course, we know that gold and silver have been used as money in hundreds of civilizations for thousands of years. Gold and silver are the only biblical money. And gold and silver will continue to be money long after the dollar and the euro and the yen have failed. So put your money where it's going to be kept safe. You can make the most profits. And finally, don't be fearful. Okay. A lot of people get scared when they see financial turmoil, but if your financial house is built on a solid foundation of real money, gold and silver, it's going to stand. And Christians aren't supposed to be fearful anyway, right? So here's your action plan. This is what you can do to protect your family. If you don't care about yourself, care about your family. Read the 10-10-10 Financial Survival Plan. You can get that by going to CFRNgold.com. You know the name of the station you're listening to, CFRN, so just add golden.com to it and you're there. The 10-10-10 Financial Plan is part of the Gold Education Starter Package. Then you need to pray about how much of your assets should be in gold. I can't tell you. People ask me all the time, well, my net worth is so-and-so, and I've got this and I've got that. How much should I put in gold? I tell them, well, I can't tell you for 2 reasons. Number one, I'm not God, and your money is not your money. It's God's money. So you need to check with the boss. Secondly, I'm not your financial planner. So you need to pray about it. You need to ask the Lord about it. if you have a financial planner that understands gold, one of the 1 out of 1,000, then you can consult him. But basically, study about it, make yourself knowledgeable, and ask the Lord what you should do. Personally, I think you should give preference to assets that are portable and concealable. Now, I'm not one that says that, like a lot of the investment grade gold dealers say the only collectible you should buy is IGG. I don't think that way. I think that there's a lot of great collectibles out there. The problem is they're not portable or concealable. If things really get bad, if the dollar completely crashes, if we have major hyperinflation, there's going to be guys roaming the streets, and they're going to have guns, and they're going to want your gold. Now, if you have your assets in antique paintings, say a 3 foot by 5 foot painting, or antique furniture, that's kind of hard to load up and boogie with if it gets dangerous where you are. If you need to get to the mountains, wouldn't it be better to be able to put your net worth in your pockets and go? So that's my position. Also, I like the fact that investment grade gold has both intrinsic and extrinsic value. We've talked about this before, but just like options have the intrinsic value of their in the money, if they are, and then they have the time value, which is extrinsic. But some options have no intrinsic value if you don't buy them in the money, and that extrinsic value can fade away. So most collectibles have only extrinsic value. Paintings, antiques, those kinds of things, they're not worth anything as far as their base material. If you got a antique Rolls Royce perfectly restored from, say, 40 years ago or whatever, its intrinsic value is the steel that's in. That might be a couple $100, but the thing might be worth $40 million. So I like assets that have intrinsic and extrinsic value. Gold coins have the intrinsic value like bullion, but they have the extrinsic value like other collectibles. So you get the best of both worlds. And finally, attend the webinars. Get smart, learn, just like you attend Dwayne's teaching to learn about trading. If you want to learn about gold, attend our webinars on Monday night or watch the videos. Okay, we have a few minutes here if anybody has any questions.
Let me take a peek in the chat box, see what I've got. No, I don't see anything.
Okay. Well, I'll leave you with a verse from Proverbs.
All right.
Be sensible and store up precious treasures. Don't waste them like a fool.
Amen. That's a good word.
Amen.
That's a good word. Thank you, Dr. Tom.
Well, thank you, sir. It's good talking with you, and God bless you and all your staff and your listeners there. And we'll see you next week.
All right. We'll see you then. Have a great week.
Bye.
Bye-bye.
You too. Bye-bye.
Okay. All right. This is where we are on the 4-hour chart. This is where we are. 30-minute chart of the Dow. Okay. One glance, and you should know what the next high probability move is for this market. Knowing what the high probability move is. Hang on.
Wayne?
Show you my screen.
Okay.
Yeah, thanks.
Yes, please.
Here we go. Okay. And there it went.
That's it.
That was it right there. And it's going to run off without us. Oh well. Get the party started. Now, if we look at the S&P, every market, every time frame. You can understand what the next high probability move is. Okay, move to the zone. We start all the way over here on the left. Okay, from the bearish cross, high probability move was to the zone below. And now, next high probability move is the zone below, with an obstacle right here where that bullish cross took place. Okay, all right, I'm going to run through these real quick because it looks like the market's about to open up a little bit, and that should make for some fine trading opportunities. So let me pull the telegram back up, go back to the concierge. Okay, here we go. Because I've been short on opportunity this week, so I don't want to miss whatever's coming down the pike here. Not going to chase this, but we should have some good setups coming off of this initial impulse move. Okay, I think we got through the S&P, and we got through the Dow. Okay, the Russell last night, considering long 1594. The trade 2 targets 96. Okay, the trade 2 target on a long trade is always a zone overhead. On a short trade, it's always a zone below. That's simple. Okay, so we triggered twice, and that's $100, 2 points, $50 a point, $100 per contract traded. Gold. Last night's Concierge Alert, considering long 1473, and that's right where we sit right now. Finally breaking away from this consolidation. So gold going higher, indices going lower. That's how the world should be. Okay, this business we've had of late with them trading together, and I mean this is just an initial move. We don't want to read too much into it too fast, but something to. It's just nice to see the market move. Okay. Well, from where we sit here, high probability move. If we stay on the north side of the BBC zone overhead, if we fail to break this trend line, then we go back to the zone below. Layer here, back to here. Bounce back and forth like a BB in a jar until we either get above and hold that on a pullback. Now there's a window of opportunity from that swing low to that swing low. It's about 82.31, 82.21. Okay, it's a $200 per contract move. The alert last night, I said to consider being short 82.50, and so that's the alerts came out. Alert came out at 6:20, so that's going to be 18.20. Okay, so 82.50. A little bit lower. Here we go. Same dynamic we saw on the S&P and on the Dow. Gets to the trigger, doesn't like what it sees, backs up to the BBC. The BBC sends it back to the trigger, sends it back up, back down, back up, until it can't pinch anymore here. Now we start to open up into this next zone below. So the swing low here was 82.16. So from 82.50, about 34 points, $600 per contract trade. The problem is getting chopped up in this. Now the S&P has a real clear picture of. Let me get rid of this for a minute. This, and then when this goes back on, we oscillate This BBC, we get below it and above it, 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 below it and above it. That's not, we don't want that. That's very difficult trading. This is what you want. Okay, your price needs to pull away from that BBC so it can do something. And once it does something, it'll pull back, give you another opportunity as it does something again. Moves zone to zone in this case. Okay. All right. Crude. Last night's alert said consider being long 57.60. Right up here, and we put in a swing high 57.79. Those are almost $200 per contract. And then the short side of that 56.80, and we've dropped almost $200 per contract on that one. Okay. Now, so far this week, Logic 247. Okay, we are in week 67. There have been 34 Logic 247 alerts. That's the dynamic round-the-clock alert service. You can get alerts at 2 a.m. or 2 p.m. whenever opportunity develops. 4 never triggered, 3 are still in the works. 27 actionable alerts. 3 of them have been stopped out. So that's 11% of actionable alerts so far this week have been stopped out. What we've averaged over the past 67 weeks is 20% being stopped out each week. Okay? All right. Well, that takes care of that. Oh, and then this week's last week was the second worst week in 67 weeks. And the sideways motion, remember on that 4-hour chart I showed you, it's been 10 days now that we've been caught up in that little range. And this is what it does. Okay. Sunday night, Globex open, thumbs up, means we found our target. Here comes Monday. Red X stopped out. Got 3 of those so far this week. Number 2. Got all these in waiting. More thumbs up. Now we're up to today, Thursday. Another Red X. So there you go. That's what we do every night. Send out 8 markets. All of our passport holders know where the high probability opportunity is. They have the entry price, and they have the trade to target. They also have the Logic 247 dynamic in the moment alerts. Tells you when to get in, where to get in, where the high probability entry is, and the trade to target. And then we teach you how to read the chart so that you can position your stop loss in the proper place. Not a mechanical number, not some fixed percentage or arbitrary dollar amount, but based on market structure. Based on market structure. It tells you to the tick. And I'll teach you that if you want to learn. All right, let's go to our good word for the day. Here we go. To whom much is given, much is required, and giving is its own reward. 2 Corinthians 12:15. I will gladly spend myself and all I have for you. The Apostle Paul wrote, I don't want what you have, I want you. I will gladly spend myself and all I have for you, even though it seems that the more I love you, the less you love me. Paul found his greatest fulfillment in giving, not receiving. For him, giving was its own reward. For him, being successful meant making others successful. For him, being joyful meant bringing joy to others. That's because he did not look to people for his reward. He looked to God. Ephesians 6:8 says, "Remember that the Lord will reward each one of us for the good we do." Now, the hardest thing for most of us to do is to fight our natural tendency to put ourselves first. That's why it's important to continually examine your motives. Make sure you're not sliding backwards into selfishness. If you want to check your motives, follow the example set by Benjamin Franklin. Every day he asked himself 2 questions. When he got up in the morning, he would ask, "What good am I going to do today?" And before he went to bed, he would ask, "What good have I done today?" If you can answer those questions with selflessness and integrity, you can keep yourself on track. Seeing those in need and giving to meet that need keeps your priorities and your perspective on the right track. It increases the quality of life for both the giver and the receiver. The truth is, there is no life as empty as the self-centered life. And there is no life as centered as the self-empty life. That's our good word for the day. Time to trade. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.